Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Salvatore Buscemi. Thanks for being on the show, Sal.
How are you, Whitney?
Doing great. Doing great. Thanks again, Sal. He's the
Got
managing director of Dandrew Partners LLC in New York City. He's a frequent speaker, guest lecturer on real estate finance. Sal, get us started and give the listeners a little more about your background and what you're doing.
Well, I want everybody to know that I started in this business by being poor. I took a pill one night and woke up rich, and that pill was real estate.
Awesome. Where'd you find that pill?
I just feel like that's the story everybody says and, everybody can relate to. My story is a little different. I actually went to school in New York City. I'm from New York City. And I, after college, graduated, went into investment banking at Goldman Sachs. And I spent the first 3 years there working in the equity capital markets desk. After the implosion of the dot-com boom in 2001, I befriended a partner through a nonprofit that I was sitting on the board of managers for, and he pulled me over to this group that made real estate investments. It was called REPIA, Real Estate Principal Investment Arena. And I was there for quite a while, and I fell in love with the business. And we were doing a lot of distressed stuff at the time and a lot of interesting things like Japanese golf course deals and stuff like that. And then at the age of 29, I raised $30 million from a hedge fund in New York. And we basically became the kitchen sink for Bear Stearns. We were buying a lot of their non-performing product. If you've ever seen the movie The Big Short, it was similar to that. We were buying the whole loans that were in default. We weren't buying any of the synthetics or the bonds or any of that stuff. And that was interesting because at one time I think we had 32 single-family houses under our control. And it was a lot of work. And what we were doing is that we were actually buying, The Big Short. Here it is. AJ has it here. I don't know how he has it in the office, but anyway.
You're in the movie. It's important.
I was in the movie. No, I wasn't in the movie. I wasn't. Anyway, continuing on. So we were basically buying all this paper from the banks, and we were buying them from by the gallon, and selling it by the shot. In 2011, there was an opportunity to buy a special commercial mortgage servicer. It was a hard money lender, and we bought it for $1, and we recapitalized it for $15 million. And what we did was we used that $15 million to go out and buy a lot of these assets for pennies on the dollar using what we call a Dutch auction technique. And that was pretty interesting too. So that kept me out in Vegas, even though I had a condo in New York at the time. But I found out later that our investors actually liked me in Vegas because it's very tax advantaged for them. Going forward, we did some other things. The market started to go up, and we used the same principles that we used to raise capital for our deals, and we got into the venture capital space. And we started doing some really interesting deals. We had an exit, what we call, a POP. And that was a company that went public in April 2017, and we were doing a lot of venture work because we saw what happened when President Trump was elected. He actually hired my ex-boss at Goldman Sachs, and I knew that things were this country would be back in business again. And so we've made about 8 deals using the same strategies we use that I'm going to talk about here when it comes to calling the capital that we did for venture. Fast forward to this past Christmas Eve, we just launched our first venture capital fund. Called Dandrew Partners Encore Ventures, and we invested in Lyft and some other deals such as Airbnb and some other stuff. We've actually invested in a company that Warren Buffett actually has a huge interest in right now called Clear Cove, which is actually pretty interesting, and I've been asked to sit on the board of that company too as well. So the point of all that, yes, we still do real estate, and we're going to talk about it. It's the skill set of how to learn to raise and manage capital effectively that will get you places further than you ever thought. I never thought I would be asked to sit on the investment committee for the International Cancer Impact Fund, but when you're the person who controls the purse strings, you sort of get a little further in life if you know what I'm talking about. And it's a great business as long as you use the same systems that I'm going to lay out here. I think a lot of people get into it, they're a little nervous. They have people who trust them. They've gained some notoriety through some successes, but they just are afraid to take on any more money because they don't understand things, or they're boxed into a particular asset class like multifamily because that's all they understand. And I'm here to, move that gateway drug out of the way and push you into some other things here and really share a lot of the strategies that we use here when we're raising capital here on our desk.
Nice. Thank you, Sal, for going through all that and telling us why you're so qualified. You're an expert, obviously, at raising capital, and that's why we wanted you on the show. And, I want to tell the listeners also about the event you have coming up March 28th, 29th. And if they're wanting to learn everything about setting up their own asset management firm, whether it's from what to wear, how to talk to investors, to call on the capital, they need to be at this event called the Capital Formation Intensive. Is that right?
Intensive, yeah, the Capital Formation Intensive. It's in Las Vegas. Awesome. You can get a direct flight even from Virginia to Las Vegas. So it's going to be great. And they're going to follow the link that you're going to provide to them, I'm sure.
That's great. We'll have a link in the show notes to that.
March 28th to the 29th, I'm being told by my COO. Yes, thank you.
Go ahead, Whitney. So many of the listeners, are learning to raise capital, or they're just starting to scratch the surface. And I know you're the expert to tell us, how to really get into that side of the business. But get us started in just, how we find investors starting out, or how do we get started on the capital raising side of the business?
I'll tell you, when I was first starting out, I was doing smaller deals, smaller, what we call special situations deals, smaller like distressed deals where, yes, I actually bought some multifamily in distress. I would always look for investors that have already have experience in the asset class. The problem is if you start going to like someone who's an accountant and he doesn't even know what real estate partnership investing is or K1s, he's going to ask his financial advisor, who's really a glorified stock salesman, and he's going to say, no, you can't do that. That's illegal. You want to stick your money in the market because it's safer. Well, they're doing that because they're being padded with fees. One of the hacks I'll share with you in the audience that worked out really well, and I'm not sure if Seth over here used it, but I went towards accountants, and I would target accountants, and I would target accountants that did real estate partnership returns. We call them Form K1s. And, they knew me, and I would always sort of like, not wine and dine them, but I'd meet them for like, Starbucks or something like that. They're really not a really fun bunch of people to hang out with. You're not going to go to strip clubs or anything with these guys, but they're very solid, and they're also very worried about their bottom line, okay? And one of the things about accountants is that if they trust you and you can link your brand to their credibility, you're going to do very, very well as far as their audience is concerned. So there's mail that people get and it goes in the trash, but one of the things that doesn't go in the trash are official forms from your accountant that says, hey, this is your tax information, be careful, open it. And what I would do is I would put a letter in there. I would put one of my investor letters and, but it would be much more watered down with a call of action and saying, if you're interested in learning more about this, let me know. I'd send them a copy of my book, but if you don't have a book, that's fine. But really sending them to a website where they could learn some more information about it. And there you're working with people who already understand real estate. They're addicted to the returns, and you don't have to worry about holding their hand and jumping through all sorts of grenades with the wife and the spouse and, the financial advisor, which will say no to anything because you're just pulling money out of his pocket. And I was able to cultivate probably about $5 million in equity from that one deal. It took me over 2 months to do it. But considering, you're working with retail investors and not institutional investors, that's like sort of like the land speed record for raising that much money. And the way we structured it was using a system I'm talking about. But you want to go to these accountants, and the value proposition to them, when I went to them, I said, hey, I'll pay for the postage for all your K1 returns. And they're like, fine, sure, we'll put anything in there you want. Wow. And that is like the gateway. And so it only costs like $400. I think I did maybe another slug with another guy, but I don't think I had more than $1,000 in postage for this. And I just said, here, just send me the bill and I'll pay for it, or, send me, I'll make sure it's taken care of, or you just hand them the cash or something. And they love it because that's money in their pocket. And not only that, but you're giving them a service too, and it makes them look better because it looks as though that they're more than just Pistol Pete the tax preparer. They're more focused on them and expanding sort of the offerings that they do for sophisticated investments that most people would not be able to get into on their own. And that's really what a lot of people are looking for today in these very low interest rate environment.
That's really going above and beyond. I haven't heard anyone say anything like that, getting with the accountant and offering to pay for postage so you can put something in there in that envelope.
Yes. It's a genius idea, and I'll tell you, you'll be hard pressed unless you're a convicted criminal 2 months out of prison that where an accountant is going to say no to you because their margins are not that great anyway, and they want to keep as much as they can. And if you can continue to do it where you do it on an annual basis, the more you get in front of these people, the more you're going to have, the more fun you're going to have, and the more capital you're going to raise.
So what are some other ways possibly to find investors when starting out? Maybe we don't have that connection with the accountant. What are some other tips?
It's really interesting. One of the other tricks that I've used in the past has been working with people who have been single-family home flippers. And, for the smaller investors, they get burned out. They just do. They get into it, they like it, they understand it, but the problem is that they still have to go out there and deal with the GPs and deal with the crooks and all of that stuff. And when you start working that way, you start attracting money from people. Now, a lot of these guys, they don't understand commercials, so you're going to have, and we're commercially focused, so you're going to have to do a little hand-holding with that. The other thing that we've done, which is interesting, and I'm actually getting on a flight tomorrow to go somewhere, is and it's going to take a little initiative, but what you want to do is you want to find a good self-directed IRA custodian. And there's many of them out there. I'm not going to mention any names, but you want to find out if you can market to them by doing some sort of a webinar. We actually had one of my students do that. He was able to raise about $2 million in just about a weekend. And we actually have a success story with that, Dominique. So it takes a little more going into it. I like to go to the top of the pyramid rather than trying to befriend people. And the other one too are just basically very wealthy business owners. Out here, I'll tell you a little story, in Vegas where we are, medical marijuana is legal, but collecting the cash on it on a federal level is not legal. And so these guys are very, very cash rich. And if you show them what to do with that cash, then they'll be with you forever. And that is a little trick, that I'll talk about at the Capital Formation Intensive. But real estate is actually very friendly for cash. Whereas other investments aren't, because you have to fill out all these forms where it's like know your client and anti-money laundering provisions and all that kind of stuff.
Wow. All right. So we've met some investors or we've taken, one of these steps that you've laid out here. And now we have some people in our network. What's next?
Yeah. The next step is that you want to indoctrinate them. And that's the whole point. Not everybody has a book. I usually send them a copy of the book. I write a letter, and the letter, even though you don't have any experience or not, it should be something curated about why you like the investment class, why you are attracted to it, why your investors should be attracted to it, and how they would be able to partner with you on these deals, and the types of returns in a range that they can expect. So the first thing people do is they show it with 4 pounds of paper when they meet an investor, and that turns somebody off. What you want to do is you want to build a relationship, and you want to make sure they understand who you are. You're probably a good guy. They know you from golf. They know you from the church. It doesn't matter. You want to make sure you continue to build that relationship. Having that commonality is just a hook, but it's by no means a closer, if that makes sense. So you have to make sure that you're out there and you're talking to these people, sending them articles like you would send your friends on Facebook. Keep your LinkedIn profile clean from the knuckle draggers and the toothless and homeless and the mouth breathers. You want to have just professionals in there and start using that, because that kind of stuff goes viral. And you really want to make sure that you're talking to people and you keep a very consistent voice, whether it's like, hey, we like cash flow from multifamily because millennials are over leveraged and they're not going to buy a house or something. Stick with a message, but stick with it that's revolving around the asset class that you're looking to raise money for.
Nice. Now, so even keeping a clean LinkedIn profile, that makes a difference?
It makes a huge difference, because people will judge you by who you associate with.
Nice.
It's amazing. There's so many people who actually come through and they're like, well, I have 4,000 connections on LinkedIn, but they're all crap. These are all people who have no money. So you got to think of your LinkedIn as being like your Sunday church clothes. That's the way I would, preface it. Whereas Facebook is like your drinking buddies, right? You don't want to link in with your drinking buddies. I use that for professional purposes. And I'm very, very choosy about who I let into my LinkedIn profile. But it goes beyond that too. You want to make sure that you're actually talking to these people and you're providing some sort of content to them so that they listen to you, so that you have a voice out there and you're on top of it. Because what your competition's doing is that they're running around with a chicken with their head cut off, looking for what I call sex on the first date. And if you do get it, is that really a partner you want to be with for the rest of your life?
Wow.
What's so funny?
the analogy.
It's all these awkward, like, oh, well, yeah.
So
Go ahead. Next question, Whitney.
Sending them articles, how are you coming up with the content to send them other than sending them your book or things like that?
Well, you don't have to have a book. There are websites out there that I like looking at, like the Real Deal. There's Zero Hedge I like. There's globestreet.com, and anything that sort of comes from authority figure where you can add a little bit of commentary. What I do is I say, hey, I agree with this guy except for this, this, and this, or I agree with this guy, but what he forgot is this, or I think this is a great article, this, and this, 2-3 sentences, and then just put the link in and send it out.
Nice. So we're sending them this information, keep us going. What's after that?
Okay, so after that, now you're starting to talk about a deal. And usually the deals we do, we're equity allocators, which means we take our own proprietary equity, and the equity that we raise, which is hard cash. Some people might call it down payment money, but we don't use that word, right? I mean, we're beyond that. And we take that and we co-invest alongside other sophisticated operators who usually family offices. So once you have something teed up like that, or maybe it's a deal for yourself, you want to start talking to your investors about this. You want to start teasing them a little bit. You want to put out what we call a one-page teaser. If AJ can switch to that right now, maybe we can have a little talk. So I have this whole template here, which we'll be talking about at the event. But it talks about everything in one page that they need to know. And this is something that comes from you, and it's very focused on the investor. Usually people will see something, and it's like a 60-page offering memorandum. It's all lies because it's coming from a broker. I know I'm offending people out there, but this is, what it is. And when it goes out like this, we set if you guys can see it, we put together everything that they need to understand in one sheet. Now, anything more than this, you're just absolutely drowning and suffocating your investors. And you have to imagine that these people are all reading this stuff from their mobile device. Okay, so it has to be very nice and friendly. So what we do is I actually, and I'll get into it in a second, but I put all the information here, the fees, the terms, who to contact, and all that here. There's a link to a data room because nobody wants to see a bunch of numbers, right? They just want a bottom line. But if some of them are like engineers and very analysis paralysis type of people, you click to the data room. The other thing I put in here too as well is I did a video. Video is the most powerful medium you can use today, and I'll tell you for that in a second. Yeah, and so this is a copy of a video. We're not going to go through the whole thing, but video is a very powerful motivator. So if you are local to the asset, and you should be if you're buying your first building or something, you need to use video. This video that we put together, I'm just going to show 30 seconds. We can lower the volume while I'm talking. Is that okay? Yeah, perfect. So the situation is that I found someone, a college student, who students are very technical, right? And so the point is that they will work for cheap. And this video here, everybody has a drone under the age of 30 today, I think. And we paid him, I think, $250 for him to do this, to put this together, add the audio, and have it fully edited. So now I have something here that talks about the location of this Class A industrial office space in Las Vegas across from a Pepsi distributor that's 166,000 square feet. It's cash flow cow. But I sit here and I'm actually going through the whole thing. I'm walking in it, and I'm walking through it as if they're looking at the deal through my eyes. And video doesn't lie. You can doctor pictures and everything, and we've seen that before, but video does not lie. And I'm telling you, when you're working with people's money, they really want to see how you're looking at this deal, that you have conviction in it, not just with financial conviction, but also you're walking it and following it around. You can hire, we've done this in Coral Gables with another property. You can find someone in any city with a drone and a video editor who's hungry, who needs to make rent, who will do this for you. And this was taken months ago. So this project has continued on, and it's all built out. What I don't have readily available, because it was actually shot recently, was a new drone video that comes after this. It's sort of an updated version of the before and after, and it shows everything about this deal. Video is very important. Even if you're using just a cell phone, you're doing a selfie stick or something like that, that's fine. A lot of our investors are very sophisticated out in New York and New Jersey. They're people I worked with at Goldman Sachs. So I go through and give them a little more more touch and feel, if you will. But not everybody has to do this. But if you do have wealthy people, you have to imagine wealthy people only hang out with wealthy people. And this tear sheet, if you go back to it, AJ, if you go back to this tear sheet here, will talk to them about the terms of the deal, but it'll also be forwarded around because these things will be forwarded. So you want to put it on here, and it's interesting because when you hyperlink this and a few other things, you see like, hey, I only sent this out to 100 people. How come there's 380 people who watch this with different URLs? Very interesting. Mm-hmm. And then people start to see and take you seriously because perception is everything when you're raising money. And that even comes down to what you wear. Mm-hmm. Does that make sense? So over here, can I go over this real quick because this is important. Yep. Over here, so I don't put here things that are very over the top. I have spent enough time talking to what we call retail investors that I know what they care about. If I put in 10,000, which you should never accept from anyone, by the way, you should never accept anything less than 50. And if you take anything less than 50, you deserve to be spanked. What it looks like, the return, the increase in their net worth. Okay, so at the end of 7 years, if they put in 100, they'll get back $235,000. And then also, this is like their, year one, $75,000, and at the end of year 7, then the projected NOI is $1.768 million per year. That's really good. So now people can say, well, if I put this much money into it, I can sort of figure out what it looks like, and it becomes a lot more easier for them to digest and a lot more palatable. Especially it'll pass the spouse test much easier because they can put 2 and 2 together and say, okay, that's interesting. It talks about what you get, deadlines. Very, very, very important. If you don't put a deadline on there, you're done. You're done. Because people today are just so busy. And one of the tricks I use is we tranche it out. So we'll say, all right, people who are first in get all the goodies. People who are second and third, it's like your third-class stewage, right? Yeah, you might get a HOPE certificate. You might get a cash flow note, which is essentially worthless, but you don't get to participate on the upside if the property is refinanced or sold. And that's really, really critical. Contact information, a little bit about us here. And by all means, before you do this, you're going to hire someone on Upwork.com, and what they're going to do is they're going to proofread it so that your spelling doesn't come across. Every time I see something misspelled, I think the person who sent it to me is missing their 2 front teeth. I just automatically think they're homeless and they can't spell. Same thing with grammar. The grammar police is always out there. So you want to make sure this is done. It'll take you $10 to have someone proof this, and that's it. It talks about this. It talks about the area. It's really well put together. And this is how you get to the yes or no. Okay, the yes or no. Because on this sheet, there are links to things that they can find out more information for. And if they want to, they can go there, and it saves you from having to go back and say, oh, let me get you the spreadsheet, or let me do this. It's all in one concise area. Are we clear?
Yes, very clear. Very clear. No,
perfect.
I like that a lot.
And it works for multifamily too.
So what about, just getting that investor to commit going forward? Okay, they've got this. What's what do we need to be thinking about or during our conversations to get them to commit?
Yeah, so what we say is we have to put the deadline. So I'm going to send this out, and I'm going to say, Whitney, this is January 25th, but, we received an extra allocation, so we're going to go a little further on this, but we'll probably go out to February. I say you have to give them 30 days. 30 days maximum between 2 tranches for them to get their act together. That's it. Because if they're not focused, then you don't want to work with them. And really, it goes like this: hey, Whitney, it's Sal. I just want to let you know we've raised already $1 million out of our $2 million allocation. I want to know if you're in. Please give me the courtesy of a yes or no, because I have other big investors who are expecting me to close this on time. Could you do that for me? Yeah. And then they'll ask you redundant questions like, what's the minimum investment? $100,000. Well, okay, and then they go, and then they what's my return? Well, it's on the spreadsheet, but we're targeting, whatever it is here, a 14.65% IRR and a 2x on your money. Okay. Oh, that's great. Okay. How are you going to be using your money, Whitney? What do you mean? Is it coming from your checking account or is it coming from your IRA account? Well, I don't know. Well, we've talked about this in the letter, when we first introduced, that you can use your self-directed IRA. If you need help setting that up, let me know, Whitney, because I'm going to help you with that. I have someone in my office, could be your spouse, daughter, son, who's going to walk through the process with you to put that together so that, it's fluid and the chute is greased for them to take as least action as possible on their behalf in order to be successful. The whole purpose of this thing is to remove any friction points as possible. And unfortunately, a lot of people are using their IRAs, but there's also some heavy lifting that needs to be done with that if they're using it for the first time. That's what it looks like. And then you call them back, and then you send an email and say, okay, we're ending this in 2 days. We're ending this in 1 day. This ends in midnight, because that fear of missing out is enough for them to take action very, very quickly.
How often are you contacting them during that period?
Not so much in the beginning, but as time goes on towards the end of the first tranche, when they're going to miss out on all the goodies, I'm probably doing that 3 times a week, following up with a text message to them personally.
Do you have that
text
automated
message
somehow?
is very important. We don't have the text message automated, although we will. AJ, my trusty COO, is going to do it, but we were experimenting with this to see what happens. But the email is automated. We use DocuSign. I'll get to that in a second, but everything is automated as much as possible. And the best thing too, and I guess we'll talk about it, is that when they say, yeah, I'm ready, send me the information. Next, you go into the you send them the docs. And the docs have been filled out by you with all the boxes and everything that they need to click on to fill out their information. So if they have to put their name on something 7 times in the document, all they have to do is once on their mobile app, and it populates the rest of the document. The same thing, Perrier is not good for recording these things. The same thing goes for their signature. They just have to sign once, and then it populates the rest of it. They got click, 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 click. So they actually can do this sitting on the toilet during their day job in literally two minutes.
So you set all that up through DocuSign?
Yes, through DocuSign. DocuSign's a little bit of pain to work with, but don't do what somebody did to me. Is they sent me docs, and then I had to set up the boxes. Like, all right, move this here, move this here. Take the time, or hire someone on Upwork for like $5 or $10 to set up the DocuSign so that all your docs are there. And the first document in the DocuSign package is usually a letter, and then it goes it's this thing right here again, because people have the attention span of a gnat today, right? They're all over Instagram and Facebook. So this is the second one. First page is thank you for this. Here's the docs. Here's the first page. And then we go through with all the other things that they need to fill out.
Nice. Okay. So now they're going to commit. What's next?
Assuming that you set up the SPV and the entity and all that stuff, I guess we sort of stopped that, but yeah, okay. You got to set up the entity, So at this point, when they commit, you don't have a bank account, so you need to go to a local bank, which is investor friendly, and set up the bank account. And then you set up in the body of the email the wiring instructions, because some people are just lazy and they're not going to go through and be like, I don't have time for this. Make it easier for them. Make it idiot proof. And all the deals we do in the body of the DocuSign, what we do is we always put in the wiring instructions, whose attention is to, the name of the entity, and everything, so on and so forth, that they can just, and I even put it on there, like on the cover, please print this email, so they know to print it. And then they print it, they don't know what for, but now it's like, I can bring it to the bank and just give it to the teller, and they take care of it very, very quickly.
Nice.
Very good, right? You like this?
Yeah, I like it a lot. I really appreciate how you're laying all this out. You've said many things that I haven't heard on the show before.
Really
great.
Good.
Yeah, it's really good. Really good.
Thank you.
Keep going.
Sure.
What's next?
What's next? I don't know, Riley. What comes next? I forget. I have my whole staff here. I forget. Well, what you do is then at this point you move forward and you continue with closing the deal. Whether you're co-investing or whether it's your own deal, you go forward with the escrow or with the firm you're working with. What I suggest you do after you set this up and the deal is closed, a lot of people don't do this, is that they pay no attention to the investor after it closes. And the first thing I do, and a lot of people really, 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 really screw this up, is that they never hire an accountant to put this together for them. You are not in the business of doing paperwork. You're not in the business of doing accounting. Your job in this business is, and I don't care where you are, venture capital or otherwise, is to find deals and fund them. Find deals and fund them. If you start working on the minutia and you're doing QuickBooks yourself, you're doing something wrong. If you didn't graduate college, you have no right working with QuickBooks. It sounds rude, but it's true. And today there are so many service providers out there that can actually help you with that, and they do it very, very cheaply. But the moment is that once you start sending people checks on a regular basis and you set it up with an accountant so that you're sending them ACHs quarterly, you are never going to lose them, because they're going to be like, wow, he's really following up on what he does. I'm getting all this, after sex support after he closed on me. And now, I want to go back to him because he actually cares. And that's what you do. You just send out some things, maybe a letter, on the quarter. It's real estate. It's slow, but at least they'll see on the quarter report what's happening with the property, send them a copy of the P&L. And that's really it. And that's not something you do, but you have the service provider do that. And once that's set up, then you just turn around and start it all over again.
Are you following up with phone calls also?
For what? What do you mean?
Just staying in touch with those investors after they've invested, after the deal's closed.
I do it a different way. Here's a hack I did once, which you'll really like. So, in the circles I run, there's these things called closing dinners, right? Can you get my little what do you call it, the Commercial Investor of the Year award, that acrylic thing? Okay. So usually, and you don't have to do this, but we're doing this now with some of our investors because people like stuff and everything. So what we do is we'll have a closing dinner. Bring this over, okay? And in the business, if you know anything about investment banking or Wall Street, there's this thing here that's called a deal toy. Now, this isn't a deal toy itself. This is just some award I won last year for being Commercial Investor of the Year. But it's acrylic, it's cheap, and you say, we closed on, 123 Main Street, it was $2 million raise, and it's something that they can take home and put on their coffee table because it elevates their status. So when people come to the house, they're like, oh, what's this? You closed a deal, Mr. Dentist? Yeah, I'm a big shot investor now. Perfect. And so now that's what happens afterwards. This thing here, I can tell you because I know people in the import-export business. And how much do you think Perry would?
Oh, that?
I can't be more than 250. 250. 250. But every time family and friends come over, they're going to look at this, and all of a sudden the attention is going to be on your investor, and they look like a rock star at this point. What do we usually do after that? Phone calls, no. So getting back to it, we usually give these out at the closing dinner. So people are like, closing dinners, that sounds expensive. Not really. There are these nationwide, these Brazilian steakhouses. It's like Fogo de Chao. They're all over the place. The best part about it, though, is that they are fixed price. So for $40, you get all the meat you can eat. And maybe you might have to pay for a little booze, but even then, when we've done it, you can say, okay, we want red. How do we do it? Prefix, price fix. It's $50. We'll give you, a case of wine, a case of red, case of white, depending on the number of people coming, and you can have the back room, and that really, really brings a lot of joy and accomplishment to your investors, because now they feel as though they're part of something larger, and they think that you're something larger too.
No, I really like that, especially the award. That makes so much sense.
It's called a deal toy. It's acrylic. Yeah. Okay. Yeah.
Sitting on their table and people come over. That's perfect.
It's interesting. We invested in a few Broadway shows, and we have all sorts of signed posters and stuff. Give me the Once on This Island one. I hang this up, and we just had a huge investor in the office. They're like, oh, you did Broadway? I didn't know that. My daughter, she loves Broadway. And, then you hear all the stories about how she wants to go to New York and, study acting and all this stuff. But it builds a commonality. But I'm telling you, you give this to someone, it's like they are not getting this from anyone else that they're investing with. And it gives them so much appreciation. Yeah. So this is something that was signed. So we actually, use the same strategies for raising and calling the capital here for a musical that won a Tony Award. Now, technically, I can say I'm a Tony Award winner, but I don't. But I should probably. But anyway, here, take the thing. Here, thank you, Seth. But, those are the nice, if you were running that kind of stuff, it would be some sort of a toy. We did another Broadway show. It was called Getting the Band Back Together Again, and it was actually a guitar pick, which is really cool. So, but the acrylic stuff you can do cheap. And if you have like 10 investors, give them 10. You don't have to personalize it. You just talk about the deal and how much raised and the date it closed. And people, if you remember going back to the Franklin Mint days where people used to buy chess sets, people just want to continue to collect stuff. And they're like, I have one. Wait, the other side of my mantle now is not, here it is. It's like a little guitar pick. So, I don't know if you can see that, but there's some interesting things here that happens. But when you give people something like that where they can talk about it with their friends, now all of a sudden you become a center of influence, and people are going to gravitate towards you who have money.
No, that's great. Great tip. So, going forward after that, any other tips for the raise or for following up or anything like
Yeah,
that?
I'd send them a letter. Can somebody get me a box? Pull out one of my letters if you can. Thank you, Seth. I didn't mean to make you work today on your apprenticeship day. Thank you. Thank you very much. Yeah, we're putting them to work. So, thank you. That's okay. So usually what I do is, and I used to do it annually, but now I'm doing it semi-annually, meaning twice a year. And I'll send out a letter like this, okay? And it's just something where I keep an Evernote of some ideas that I want to talk about, and then I put it together, very poorly put together, and then I hire someone for about $150 to clean it up, put it together, add the hyperlinks and all that kind of stuff. Then I go in and I add my voice in it, remove all the profanities, and then what I do is I email it out to them, and I say, hey, this is a letter and everything. And one of the things I do too, is like, this is years of experience, but on the back of this, I have, like, on Fiverr, you can have a digital signature made, right, which is like a PNG file. And I did that with my signature here, and I just put it on all the letters, and then I email it out. And I also use the letter too as an attraction piece, as a lead magnet, to be able to, for new investors, like, well, what are you doing? Well, here's a letter. I can't talk right now, but if you can read the letter, please, I'd love to talk to you afterwards. Because you always want to make sure you're qualifying them. A lot of people think that you're forced to be qualified and you're being cross-examined. No, I want to know who I'm getting in bed with, because divorce is a hell of a lot more expensive than marriage.
So
does that make sense?
Yes, it does make sense. It makes a lot of sense. That's great. So probably something that that's not as obvious, that the mistakes, a big mistake that people make when trying to raise capital, that's maybe not as obvious as being a slouch or not having your social media cleaned up, things like that.
Yeah, people are going to judge you on social media. I'm telling you now. Nobody wants. People are very gut instinctive when they do this, and nobody wants to go on your social media and see that you're arguing politics 50 times a day, or you're doing something else that's not congruent with the business you're trying to build. So be careful about that. That's very, very critical. The other thing too, and this is something that's going to really rub people the wrong way, is you got to subscribe to a dress code. I went to private schools. We wore blazers. Doctors wear doctors' white jackets. Chefs wear chefs' hats. Deal makers wear jackets. Women wear, professional, attire, skirt and heels. You have to make sure you play the part. Seth, come up here. This is how this guy dressed today for his day in the office with us. Come here. He's an apprentice, okay? So look at him. He's got the deal sleds on. He's got, a tie and everything. This is a guy, thank you, model, who he's a guy that I would take seriously and sit down with. What you want to do is stay away from the guy that's sitting in, like, the brown plaid, suit that's oversized, his hair sloppy. He's wearing rubber-soled shoes with laces. He looks like he's never done anything before to raise money. And so, we get into this a little bit at the Capital Formation Intensive. I'm actually bringing someone in to talk about this. But I will never go and talk to someone I'm raising money from in anything where I'm not wearing a jacket. Even if it's a suit jacket. Even if, like, a suit with no tie, that's totally acceptable on the West Coast. And it's getting more acceptable on the East Coast. On flyover country, just, maybe nice jeans, a pressed shirt, and a jacket. And that's enough. That's all you need. And nice shine shoes. Don't wear stuff that you're changing oil in, by day. AJ's laughing. But you don't want to, like, you want to give the perception that you care enough about your own personal detail, because because people are going to trust you with their money, and you better show them respect. If you go to London, you better be wearing French cuffs, a tie, a suit, probably a little more. And
see, if you weren't wearing the Patagonia.
I know.
You can slip that on.
That's because it's cold. I know, but it's a webinar, so it's fine. But the point is that and certain, like, and to go deep, certain cultures, like Asian cultures, they expect you to wear name brands. And if I'm in New York meeting with an Asian family office, I am dressed to the nines. And we do that because we want to be like them. We're mirroring them. Does that make sense?
Yes, it does.
Okay.
What would you say is the number one thing that's contributed to your success?
Networking. I hate this cliche, and I got to come up with something one night after a few beers, but your network is your net worth. And it sounds so cheesy and, rich daddy and all that, but the point is, it's so true. And I've known people who have had no network who have come through me or somewhere else, where it's just a matter of who the people you are, and that's going to elevate you. It's going to give you much better deal flow. It's going to give you much more access to capital. People are going to trust you. It's going to force you to step up your game. And you should always be networking. Last night I was talking to a guy who's he's an asset allocator for a $1 billion family office that sold they used to make a lot of shoes. I'm not going to talk about the name of the company, but I was networking with him. He's like, oh, you should talk to this guy. He loves real estate. He especially loves this stuff because, you know, he has like 2 sons and he puts it in his son's trust and stuff like that. So the networking is very important, and treat your network like friends. I have enough drinking buddies today. You know, I'm 43 going on 44. I have very close friends that are my family, but, you know, I'm not on Facebook trying to find investors. I'm trying to, you know, I have a fan group and stuff like that. But, you know, as it relates to like LinkedIn, the most important part to me is, who am I linked into who can help me or who I can help? And the number one rule with networking is to provide value. And some of the most wealthiest people I can tell you and who've come to my office is, you know, I've helped them, but they'll say, how can I help you? And the first thing what you want to do is, when you're engaging in a relationship with someone, is say, hey, Whitney, great to meet you. What are you doing? Blah, 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 multifamily. Sorry to hear that. No, I'm kidding. But, you know, the point, no, I would. Yeah, I'd be like, how can I help you? You know, and that's really the most important part. And then at that point, the relationship is open a little more. I think people just get too horny and eager, and they're desperate. And, you know, that's why I make that analogy, is because, you know, they come up to you like, oh, I have like 4 pounds of paper about a deal they know nothing about. And the other thing too, especially with your network, don't insult them. Make sure you know your deal inside and out. And if you don't, ask someone who does to help you.
Nice. So is there a need in your business right now that you'd like to let the listeners know about?
A need in my business?
Mm-hmm.
I think they need to learn how to do this after 2 days with us. That's what I think. You know, I mean, if people are really serious about this, you need to do it from someone that has a lot of experience. I have 20 years experience in this business. I started out this high. I was always this high, but like this high, working somewhere where a lot of people don't really work. And I've learned a lot from world-class bankers and operators and investors. And the thing to me is, if I had the opportunity sitting in your viewer's shoes to get 20 years experience in 2 days, I think that would probably be a network too. I think that'd probably be the most powerful and impactful thing, because I think at the end of the day, you can look at all the deals you want, but if you can't raise the capital, you have no right being in the business. If you do not know how to talk to investors, you should not be looking at deals. You should always get the money lined up first, find out what they want, and then go out and hunt for it.
That's called the Capital Formation Intensive in Las Vegas, March 28th and 29th.
That's correct. Right. Isn't that great? It's coming up soon.
That is coming up soon. We'll definitely have the link in the show notes.
We'll see you there, though, right?
That would be incredible. Yeah, that'd be great.
Yes. No, that'd be wonderful. Yes.
Sal, you've been a fabulous guest. I really appreciate how you've laid all this out just in great detail. You know, tell the listeners how they can learn more about you.
You can go, actually, if you want to learn like what we do and maybe like how we talk to the investors, you can go to, you know what, I'll do something better for you. Go to thecommercialpitchbook.com and you'll have a real good pitch book for you to show your investors your deals. And you can do that. Go to thecommercialpitchbook.com, THE, commercialpitchbook.com. Hopefully they can spell commercial. We'll leave it at that. All right. If they can't, no bueno, then stick with flipping homes. Okay. But, you know, thecommercialpitchbook.com, and that's probably one of the most powerful tools you can have, because when somebody says, give me more information, that's what you show them.
Nice.
No. All right. And if they want to see a letter, they can go to thedandrewletter.com, DANDREW, thedandrewletter.com, and you can see how I talk to my investors, so you can sort of mimic that sort of approach and voice.
Great. Thank you again, Sal, for your time. I really appreciate you being on the show. And
I
appreciate the listeners being here. I hope you all will contact Sal. I will see you at the Capital Formation Intensive in Las Vegas. The link will be in the show notes. And I hope you'll go to LifeBridge Capital and connect with me and join us in our Facebook group, so we can all learn and grow this business together. And we will talk to each of you tomorrow.
Thank you. Thank you very much, Whitney. I appreciate it. Take care, guys. Thanks for your time.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.